Listen, Jackson Hole is still happening, but pretty much everything you read in the market's like, well, it's virtual, so that kind of takes away some of the shine from it based on what we might hear. Or is that not true? Do you think that Jay Powell and the Fed could still make a bunch of big headlines?
Well, I think it's going completely virtual just told the market that they're not going to make the big headline that I'm going to say that people might have been worried about, which is that there was going to be some big rollout of reducing the asset purchases here in the short run. I think that's off the table. I think that's why you saw the market perk up a bit on Friday after a pretty poor week, and maybe why we can continue to have a nice rally into this week. So, we had seen some worries because part of it is it gives, I guess, the actual concrete side to the fact that we have seen an actual impact of the increase in infections. So we know it's showing up in the economy, and taking that meeting virtual just, kind of brings it home.
Does it matter if the Fed delays the reduction or the taper, whatever you want to call it, by a month or two, Bill? That's what I guess my point is. Like, we know they're going to do it. If they do it in September or November, does that really make that much, or should it make that much of a difference for our viewers that are just throwing money every month into a 401k plan?
Yeah, I mean, it honestly probably shouldn't. But I think what's underneath the surface is this worry in the market that the Fed is going to move too swiftly to take away accommodation, and that could snuff out this strong economic recovery. Actually, I guess now I have to call it an expansion, and that's really underneath it. So, the exact timing, you're right. It kind of seems silly that a few months would necessarily make a big deal. I think the real deal is, well, the longer you wait is maybe to be more sure that the infections aren't really going to get bad enough to truly sink the economy, and you don't want to be moving ahead of that.
Yeah, I mean, so as a fund manager, somebody trying to manage money, look at companies, look at earnings right now, is it all kind of about the path of cases and outcomes? I mean, nobody wants to become sort of an amateur epidemiologist, but we've all become sort of forced to be one. There's some very positive trends, by the way, down south with Florida, their top 7 counties rolling over in a big way, thank goodness, with cases coming down. Is that kind of the first thing you look at every day, Bill? Or if not, what is?
It is quite a bit. So, watching on the margin of, transit usage, I'm really interested in consumer mobility, because at least certainly recently, when you look at the economic numbers, so let's just use retail sales last week, the headline didn't look great, but underneath the surface, there was some good news there. So you still had restaurant and bar sales up nicely month over month. And that is, again, the services side, the side that COVID really hurt and kept down longer. It was, I say is still getting better. Now, these cases we're seeing, again, consumer mobility is declining somewhat. I try and put it in a relative. It's not collapsing like we saw before. So I have to, shave some numbers on the margin. But on the whole, it still looks good. And I think it's just going to push some of that economic activity out until, say, the fourth quarter and 2022. So I think we'll still get it. So, yeah, I mean, that is a big part of what we look at. I think the other part is it's probably, some of the inflation may stick around a little bit longer. That certainly, as I'm looking at companies, part of the scenario, you've got to see where they're able to raise prices and such.